Welcome back everybody into another daily recap. Today is Friday the 17th of February and so we are approaching the end of the week, and this is the price action that we saw on gold. Today was a day with no fundamental catalyst, no news, so we can see that we had this overall range movement. We went all the way back down to 1820, tapping the key level after breaking and retesting multiple times 1828 key level, and then after the New York session breaking above and going back into the range, tapping 1840 again. This is a nice price action that we're going to see on the 1 minute, and we can try to understand it from here. This is from London. So of course now we're trying to understand with the PPLs, with the price action, what we can actually, if we can actually anticipate some move and understand where the key level reaction. So we can see that during Asian, the overall Asian session was so clean, with a bearish trend line, a bearish market structure, not really a trend line, but you can see, you can identify clear lower highs, lower lows, lower highs, lower lows, lower high, lower low, failure to break above 1828, new lower low, new lower high, and making the way at pre-London, making the way for a new lower low. So we can really identify a bearish market structure, very clean and clear-cut textbook on the dot. So on gold, sorry. So we can see that during late Asian market open, we had the retest of 1836 key level and this previous PSA. We can even zoom in. Then we had this is during Asian session. Yes, we are in a little bit of the range, but we failed to break above. This is most likely the next PPL 33.675 if we put the other indicator, and but still it's a failure to make a new high. Then price breaks below 1832.5, which is also a PPL and a strong PSA, and make its way back down, makes a new lower low. This is like a 60 pip move down to 1826. We have a pullback. If you can see already that this is around 61.8 retracement tool, retracement after making this is the last impulse, making a new low. That's exactly 61.8 being tapped. But even as just per price action, you have multiple confirmation of price staying below your PPL, and you can see also the previous PSA, the retracement just goes exactly to grab the liquidity at these previous lows on the left hand side, grabs liquidity there, and then stays bearish and keeps the overall bearish structure. So that's why you could have had during Asia multiple entries, and then you see that price slowly but manages to goes back to these previous lows for a 35 pips scalp, and then even making a new lower low. As I said, it's this is a new lower high when this price action fails to break above 1828 and even 1827.5, which is the PPL, fails to make a new higher high. So that's where the bearish market structure is intact. And here we're coming into pre-New York, pre-London time, and we have also nice candle confirmation at the next PPL below 1825, down to the next PPL 1822.5. It's a clear 25 pip move, and with the possibility to go back down again to tap 1820. So we're going to see during London what the price action is doing. So we can see now we are making a deeper pullback. Now, of course, switching from from pre-London to for Asian, late Asian, and the pre-London and New York and London time, the volume is very different. You can see it already in the size of the candles compared to this one. Even when the price was trending, the size of the candle is much different, and we can always see deeper pullbacks with the liquidity grabs. So the liquidity grab, you can see it here, has happened here, and we failed to break above 1827.5 during pre-London time, and that's where we can identify, yes, there's a deeper pullback and a continuation, possible continuation down if we fail to break a market structure, because as I said, this is the last lower high. If we make a new high, then we can start seeing a shift in market structure and go on the bullish side. But if we see either a double top or even this strong rejection, then we can take advantage either of aggressive entries or retest of 1825 to go back down to 1820s and take advantage of the bearish trend continuation. So let's see what happens next. So we can see here, that's exactly what happens. We can see here, you don't have to enter here very high risk, high reward. You can, if this was a pre-planned deal, but you can see you have a clear cut retest, as I told you, of 1825. And now we can now go back to the previous lows or even further, as you can see here. So we are now making a new lower low, maintaining a bearish market structure. This is the last lower high. Let me make it higher. This is the last lower high, and this is now a new lower low. And that's where you could have, okay, let's see if price stays above there. We can have this price action formation, or can even have another retest of these previous highs on the left hand side. But that's where we can have still have a bearish bias as per trade idea. Let's see what happens. Now we are into London. This happened only in the last 10 minutes, 15 minutes of pre-London, price moving around 60 pips, so very strong liquidity grab. 1820, it's a key level and PPL. We have a bounce. We can possibly identify a first double bottom. If we see a price action like this, impulse, first leg, second leg, and then continuation up. Same, you can either take the very, very aggressive double bottom trade or wait for the confirmation above the next PPL. So let's see what happens. No, we have a deeper pullback, deeper price liquidity. We are still making new lower low, and as you can see, we are respecting this price action, as I was saying before. We are respecting these previous lows, so that's possible for the confirmation for sells. So now we want to see a break above this level and the PPL for price to actually come back into bullish and take advantage of this overall range that we can take advantage of to the previous highs, which is still a 50, 70, 60 pips move, and then identify that this is the just simply a deeper liquidity grab. This entry would give you that quick scalp to the previous lows. So let's see if we have this price action as expected or if something else happens. So you can see we have a clean rejection, strong rejection, and at the PPL down to 1820. So this is a nice 30 pip scalp, still maintaining still maintaining a bearish market structure, making a new lower high, actually failing to make a new high because this whole price action has not been invalidated. We don't see an engulfing bullish and then a continuation bullish. We see a strong rejection and continuous stronger bearish ones engulfing all these bullish price action. Still, for now we are failing to make new lows. We can see if we can go down to the 1817, 1818, or we can actually see further bullish price action. So as you can see here, what is happening, what we are seeing is that price actually manages to break above, and we have this retest. This is happening after a strong bearish candle, and if you remember, that's where I said that we could have possibly had a first rejection here at this liquidity, or here to this previous price sensitivity area on the left hand side. So now we can have both bias. So it's better to stick to one simple bias. What you can do to get a better understanding is, okay, where is this 1818? Is it a strong PSA on the 1 minute? So let's go back in time. Let's see if we had a multiple reaction at this level. Yes, looks like 1818 was a strong PSA, so we can validate and shift on the bullish bias. So maybe you have your entry very high risk high reward over here, covering this old move and trying to get back to this above these previous highs on the left hand side. Let's see if that's what happens. As you can see, we have a strong price action, strong bullish continuation, bullish, and then we have a very nice move. Now now we got like a 50 pip down up to the next key level. Still will not be optimal trade because that was not to be a 3.1 would have been like like this, which can still make sense, but the price action makes more sense to have it like 20 pip. So maybe you take it and that's it, because we are reacting at a very strong PSA on the left hand side. So maybe you just leave a runner going, and let's see the following price action. If we manage to actually retest this area and PPL and then show further bullish side liquidity. Actually not, you can see it has been completely invalidated. So that's where you could have see your runner would have been at break even, or you took out your profit. So that's up to you. That's just a decision. That's actually a 50 pip profit. So I don't think it's bad. I think it's, as a scalper, 50 pip is way more than enough, and just not be greedy with the 60 pip move. Now, where are we reacting? You can see it clear. For now, we are reacting exactly at this level. So what we want to see is confirmation that this price action is still bullish liquidity coming in, and not just another lower high for then a continuation bearish. So you want to be very careful at this PPL to see what is the price action showing you as per liquidity bias. So you want to see one direction, one-sided liquidity, to have a clear mindset for the buys or sells. So as you can see here, for now we are just ranging, we are bouncing. As you can see, for now we are still reacting exactly at this level. This is absolutely a PPL 6.125. It's a very strong PPL, and we can still now possibly make a new lows after this rejection, liquidity grab, and then the retest of the PPL. But still we are staying above this level, so it's still quite a messy situation. We are possibly, what are we? Yes, we are possibly at a 50% retracement of this overall bullish move, but let's see what is just the price action telling us. As you can see, yes, we added the confirmation, especially with a break below this level, and now possible continuation to the previous lows, 28 pips. This level already that I showed you already is 20 pips in profit, 28 pips in profit. So let's see how you can take advantage of this overall move at the time that I told you. This will be like 18 pip stop loss down to these lows. It's a 50 pip TP, and let's see. You can see that the price is bouncing. So I think if you didn't take any profit here, you would just let it at break even, not taking a full stop, because the price action is not showing you what you want in as the bearish strong movement. You would have loved to see stronger bearish movement, especially after this break below the PPL. Instead, what is being validated is the liquidity, the bullish liquidity on the left hand side. So that's what you want to avoid, to be in drawdown and to risk a loss for this matter. So yes, now you are at break even. Same trade idea. Now you have this strong PSA on the left hand side. You can either take high risk, high reward buys if we break and show bullish liquidity, or break above this level. But if we still now stay in the range, it's better to stay out of it. As you can see here, for the rejection, now we are actually making our way above this level. So let's see if we can actually manage to have a stronger price action. Let me just delete this. for the bullish bias, as you can see here. Okay, you can see that this price action is already showing you first bounce. That's now your first entry, 15 pip, 45 pip. You could have had the second entry above this level, as I told you. Let me just decrease this. Okay, you can have your price action now. Price is breaking above these previous highs, so we can have a nice range on the upside. That's where also you can, especially if you're intraday, you could add position above this level if you see that the bullish price action is going strong, to take advantage of the overall move, and understanding that on the 15-minute, if we zoom out, we are now breaking the whole 15-minute resistance, and that's where we can have a nice uprange first to these previous highs. But if it breaks that, we can go all the way back down to 1833 and even more. So let's see what the price action is showing us. We are now also almost at New York open, so we can expect deeper pullbacks before New York open. We are now into New York. This is the pullback right before New York, but what you can see is that the price fails to make new lows. So that's where you have the confirmation of staying into your trade, even adding to your trade, and let's see where the price is going now. Quite a strong rejection, quite a strong double top over here. So I would say that now you could even take this second TP, like a 30 pip. When you see that price is failing to break, especially after all this price action, you could take your 30 pip, or if you want to stay in the trade, you can just see is that I don't like this double top. I really don't like it, and might be a sign that we need further liquidity on the bullish side, so we can go anywhere to grab this liquidity. And you don't want to stay in a trade, even if you don't want to stay in or down, especially if you don't know where the liquidity grab will stop. For example, here you can see it will stop over there, so 45 pip in this case would be it exactly on the dot. Basically, I would say for the 44 would be TP, very fast. And let's see now the price action into the new 4 hour. Why are you so okay? Okay, that will be your profit. No real price action for the continuation bias, I would say, but still you can see that yes, double top but failing to break. Let's see now with the new 4 hour candle what the price action is doing, quite choppy. And let's see now we can where we look for sells is only with the validation of this supply side liquidity. And of course I will want of course nicer, maybe a top, a liquidity grab like this one, and then continuation down, break below, and then especially we could have 2 areas of interest for the sells, which would be the high risk high reward key level, medium risk below this liquidity area, or safer below 1825. Let's see what actually happens. Okay, so as you can see here, what you had was if I show you this one, okay, you had the first sells with the retest of key level and the break below the key level for 45 pips, or further scalps down below this area of interest. This would be like a 14 pip. It would be like 30 pip TP. And you don't have, maybe if you took this one again, this would have been a loss, but apart from that, that would be two winning trade ideas. So that's further further wins. And that was what I was telling you was exactly this one. If you just simply rewind, I told you that the liquidity for the push on the upside would have been anywhere between this level, or even below. So that's where you didn't want to stay in this trade, because that's where liquidity could come from. And absolutely, that's actually what happens. Incoming liquidity exactly at 1823, and that's where again you could have your validation for buys with the price action above high risk, high reward, medium risk, and safer. And the safest, of course, would be at the break above these previous highs, as you can see. So you would have had, I would say that the best entry, this one is too high risk. This is your possible, very still quite high risk, high reward entry for 45 pip, and possible further entry above this PSA and above this one. So what I was looking for was above this low, but now the safest would have been only above these previous highs. So we had the break above this level, break above this old PSA for possible continuation bullish. You have also break and retest, and now coming into 10 a.m. candle, and that's where you have your possible further entry being validated as per trade ideas. So that's absolutely nice. And price is simply going up to 1840. 1840 it's a strong PSA, and that's where you see a strong rejection. Again, that's where you see, okay, where is the validation of bearish side liquidity? Okay, you have this strong rejection. If it breaks and stays below the VPL, that's a strong possible bearish side for quick scalps. But as I did before, where the price can grab liquidity for the continuation bullish, you can grab it here, you can grab it down here, you can even go and grab it all the way back down here, simply because of this fast movement. That's where the price can go and grab liquidity for the continuation bullish. And that's actually, in this case, it simply goes to the first one, grabs liquidity. You can see a shift in the bearish side. There's no more bearish side liquidity, and that's why you have the further continuation up. Still be careful, because you can have like a 75 or 61% retracement of this bearish move, where you can see price reacting at this level and then continuation down. That's exactly what is happening. Okay, there you go. You have it. If you stay in it, you can even take advantage of it. Look at it. Yeah, that's exactly a 61.8 retracement of this bearish move. You can even take advantage of it for 30 pips, but still, if you are in the bullish trend, you can even have your further entry over here. We're now breaking and staying above this pivot area. So that's where we can have further continuation bullish to the upside. As you can see, price going and tapping 1842.5, which would have given you further possible scalp entry, in this case for like 30 pip. And now we are of course talking late in New York. So let's see how long the price is closing. We are closing over here, and yes, this is pretty much the recap of the day, trying to understand live price action, making the right adjustments. And as you can see here, calling this first scalp on the downside, and then the continuation bullish if we saw a break above this level, then understanding these possible rejections with a possible break even, and then the continuation bullish. So that's actually very nice to see. And yeah, that's pretty much the recap of the day. Okay. Okay, so that's it for today. See you guys on Monday.